Good morning, good afternoon, and good evening. It's Saturday, February 24th, 6:01 p.m. And welcome to the latest episode. This is Mark Yu.
This is Wawi Santos. Hello.
Hello, guys. Hope everyone is doing fine. Welcome to our show, our latest episode 101. We have pierced through 100. We've been doing this for almost 3 years now. Can't believe it. Is it 3 years already, Wawi? 2024, yeah.
Yeah, 3 years,
We
101. It's just like a computer code.
Yeah, we started
101.
2021 amidst the recovering economy from the pandemic. And all that behind looks like, and on our latest title, it shows Nvidia to the moon. So we're gonna take a look at this hottest stock in the stock market. It's been heavily traded right now, including options. It's more interest is getting more interest, and actually, the second most stock following Nvidia is actually the Supermicro computer. And then Tesla is closely following the trend. So a lot of investors and speculators are jumping in on the trend. And we're going to take a little bit of a closer look on its numbers in a little bit. But yeah, just disclosure, we're not registered financial advisors. And then just in a little bit, we're gonna take a look also as well on Wawi's pick of the week. So on a weekly basis, we take a look at the sentiments. Oh, and oh boy, we have another additional sentiment survey that we're gonna look at, or we're gonna closely follow on a weekly basis, in additional to our fund flows segment. So stay tuned for that. So for the first sentiment survey, we always take a look at the American Association of Individual Investors. So as of the 21st, from last week, the bullish investors went up by 2 percentage points to 44%. The bearish investors have remained at 26, and neutral investors have decreased a little bit from 31 to 29. So in terms of historical basis, there are a lot more bullish investors for the last 4 weeks. So you can tell from where the stock market is at, and we're gonna show you a lot of graphs just in a little bit to support this findings. So for the fear and greed index, look at that. While we are now on extreme greed,
I
78
don't think
points. And
I don't think we've seen that in a long, long time.
we haven't seen that for the last, I would say, for the last year. No,
Yeah, for
actually, for the last month or so. It has been actually reaching the
extreme greed.
extreme greed only between July and December. So that's quite a long period. But since December rally, we have been hitting extreme greed. So it doesn't feel quite like it, but we we are actually in the extreme greed territory now. And look at the market momentum here. Way above there. We have now pierced through 5,000. We just discussed that last Friday, and we are now 5,087 points as of 5,088 points as of yesterday, which is ways away from the 125-day moving average. Strong momentum here. And look at the stock price strength. It is still picking up. So contrary to common insights that we have been picking up, that only the Magnificent Seven is carrying the market, not true. The stock price strength, there have been a lot of 52-week highs recently. The McClelland volume summation also checks the buying and selling activity of the thousands and thousands of stocks in the stock market has been slowly climbing up as well, indicating that the market breadth, the support, the the sandwich spread that kind of supports the increase or the rapid rise of the stock market is also turning positive since February 9th. So this all together is a good sign if you are optimistic or bullish, thinking that the stock market will go up in the next couple months. The put and call options, a little bit of increase here, but not really above the long-term average, but it's slowly been increasing. Some people are trying to protect their investments by buying some put options, which you can't blame them for. If you want to protect your portfolio from any downturn, your put options would rise in value, given the fact that you have selected the options date very well. The volatility has been going down from last February 20 of 15 times. We are now 13.75. So a little bit less volatility in the market, meaning that the stock market obviously has been going up and up. And let's see. Okay, the move index. We haven't been able to add this to our weekly sentiments, but this is the equivalent to the volatility of the bond market this time. So nothing much to look for in the bonds side of things. The move index is also down 3.37% for the past week. Volatility, as we've said, is down 5% for the S&P 500. For the NASDAQ, it's also down 2.69% for the past 5 days. So a quick check on our yield curve. So the yield curve since the start of the year has increased actually. So from let me see here, January, December. I want to see December. From negative 0.91, the 10-year minus. Well, okay, so this is 10-year minus. I'm looking at the. I want to take a look at the yield curve, 10 versus 2-year spread. So 10-year versus 2-year spread for the year, it's actually down. So this is the one that we take a look at. So we're getting this information from Guru Focus. Not sure why I can't pull up CNBC. Maybe I can. Oh, yeah, I can. So let's just see if it's the same thing. So moving forward, we'll just rely on Guru Focus. I think they have better look in the chart schema things. Is more basic and easier to pull up. So December, we closed the year at negative 0.35. And right now on a 10 versus 2-year, it's more negative at this point, negative 0.44%. So meaning it's just our little bit of theory here in this podcast that as it goes more inverted, it's better for the stock market actually. Only when it's slowly going back to positive, when things get a little bit interesting, right? While we get more volatility, a little bit more sell-off in the market, as we have observed.
Yeah, yeah. But current volatility is low at this point.
Right. And volatility is down, and that kind of supports our kind of a little theory here in this podcast. So fund flows, where is the money going? So this was published just yesterday, 6:18 a.m. by Reuters. Investors reduced their holdings in global equity funds in the 7 days. Wow. So they must have missed this rally. Those people who have sold the 2.64 billion that investors sold this week after a 10 billion worth of net purchase. So 10 minus 2.6, still about roughly, still positively invested in the stock market at this point. Let's see who sold who. So despite the outflow, the MSCI World Index hit a record Thursday, buoyed by Nvidia, as they reported a triple increase in their first quarter revenue. And the US and European equity funds also experienced some outflows, as supported with the recent for this past week. So 4.8 billion was sold in US stock market. And just a little bit, 271, a quarter of $1 billion from European. Asian funds, interestingly, attracted 2 billion worth of inflows. So a lot of money went to Asia, a lot of money came out from US. Financials, healthcare, and metals and mining lost $500 million each. So a lot of selling in financials, healthcare, and mining and metals. And global funds, oh my, global bond funds had attracted another nearly $10 billion worth, 9 consecutive weeks. Wow, investors have been buying a lot of bonds, Wawi.
Yeah, that's an interesting trend. You
Yeah,
gotta keep monitoring.
yeah, nonstop. I don't know what they're thinking. They're missing this rally for sure. Global high yield received 1 billion, the largest inflow in 3 weeks. Investors also added some 700 million in government bond funds, 225 in loan participation funds. So let's see the money market. Money market experienced 9.69 billion in net outflows. Second week of outflows. So a lot of money going out of money market trying to find a new place. Looks like some of them are definitely going to global bond funds, but definitely not in US stocks as of this week. In commodities, precious metal like gold saw their eighth consecutive week of outflows, 767 million outflows. So not a whole lot of love for gold since the start of the year for the past 2 months. So that's for the fund flows segment. So this is another chart from bar chart that we're gonna dive into quickly before we check out Nvidia as what people have been talking about in the chat room. So largest another information for the fund flows. Largest weekly inflow into small caps since June 2022 this week, 5.1 billion. So I'm not sure where that money is going. Some of the commenter here says maybe SMCI. No, we're not sure where that money is going, but definitely small cap sector. In fact, we can ask Google, what are the largest companies in small cap? If it can answer it correctly. SDVN, Paramount, USM, Batra. So yeah, that's not a highly recommended turnout search, but so some unfamiliar things, as I also am very biased only to large companies. So for the group performance for the past week, the best performing sector, believe it or not, is consumer defensive, followed by healthcare, followed by financials, and then followed by basic materials. Actually, technology wasn't really that much of a big deal or outperformer last week. It's just up plus 0.45, barely making it to 0.5 or half percentage return. So this is our new sentiment reader. It comprises of global indicators, 33, in fact, specifically global indicators. So this will be very helpful to see what the sentiments are globally and also per category for the past week. So we're taking a look at the past week alone. So as you could tell, just to review this very nice indicator here that we can access, it usually goes up during periods of turmoil in the stock market. It usually goes down during periods of peace or not so much turmoil or bankruptcies in the stock market. So back in March of last year, this overall FSI or indicator is way up there, positive 2.426. And right now, we are close to inversion. We're actually inverted. So we're negative 1.8. So in terms of its history, if I can check, maybe I can access. Okay. During the bull run, the nonstop bull run since the bottom of the pandemic, we have reached the maximum bullish point back in February 19 of 2021 at negative 4.2. But it didn't stop there. It just hovered between 4.2, 3, but it slowly increased to positive. When it hits positive, it hit positive in February 18, 2022. If we're going to take a look at the stock market and where it's at on February 18, 2022, yeah, that wasn't even the peak, 4,300. But as you can tell, it still rallied after that. But it's nevertheless some sort of a good indicator of bullishness or market support. Because what it takes into account globally is the credit, the equity valuation, funding, if there's any stress in funding, safe assets, volatility, which we take a look at every once in a while. So it's also really good to include this in our weekly sentiment guide. So right now we are the most negative in the past year. So meaning that we are very lucky that the sentiment worldwide, supported by these factors, 33 global indicators in summary, is indicating that we are actually loose, or what do you call that? Easy money, sort of, right? Would you agree with that, Wawi?
Yeah, and I was just thinking after you're showing this global indicator
Mhm.
that likely the reason why they're putting a lot of their money into global bonds is they're just standing by, because of the current geopolitical tension there in Israel and Ukraine. And as we
Mhm.
know, we're still talking about US aid to Ukraine pending. And I think it will start moving markets once there's some sense of stability, especially I believe if the US will take a position of assisting the Ukrainians with weapons support
Mhm.
for the stability in European region. So this is a good indicator you've discovered, and it's
For sure.
reflective of the macro environment we're in.
Yeah, and on the next tab, it says regions. We can also isolate United States from emerging markets. If I uncheck emerging markets, you could tell, the United States has gone into easing mode at this point. A lot of good information here if you're bullish in the stock market. So, jumping on to the next one. So, another chart from bar chart. The S&P 500 has now traded green in 15 of the last 17 weeks. So, in the past 4 months, is it? Yeah, 4 months. 90% of the time or even more, S&P has been positive. So now we are kind of like, is this the, indicator that kind of like correction is kind of near, or is there still momentum? As you could tell earlier on, the market breadth is supporting the fact that there's some strength, some fundamental force behind the rally. It's not just light trading that's happening. There's a lot of money piling in, a lot of stocks that are supporting. So another chart. So people are saying we are now close to dot-com era where it popped and a lot of people have been toast and lost their money. But this is an amazing chart shared by Bar Chart, but this is from Bloomberg. If you're going to take a look at the white line, that's NASDAQ starting from the bottom, December of 30, 2022, in the comparison to the bubble. in the NASDAQ starting October of 1998. We are nowhere near that graph. So that's another positive sign. If you're getting scared or if you're trying to be defensive, I don't think this is the time to be so, despite the rally, all-time highs. More upside, according to Bloomberg. In fact, sell-side price targets imply US tech stocks have more upside than peers. So this is in comparison to the world, excluding US tech stocks. So there is still upside for the US tech stocks. Oops, sorry about the noise. All right, we're gonna go into Wawi's take for this week before we jump back on Nvidia.
All right, Mark. This week's stock picks, I have picked out Moderna again. This is a stock that I held before during the COVID pandemic and had since sold, and now I'm looking at it again because of their new melanoma cancer product in collaboration with Merck.
Oh, okay.
They're on their phase 1 and 2 clinical trial, mostly in the UK. So, so I'm looking at it right now. I think it might be a good entry point for those that are a bit more aggressive in their portfolio.
Yeah, I'm looking at the performance for Moderna. Moderna is close to $37 billion in market cap, but they are down for the past 12 months, down 35%. And since the start of the year, they're down 3%.
A lot of that is from
Mhm.
a lot of the COVID pandemic restructuring they had to do. They had to pay off some of their manufacturing contracts. So they're downsizing somewhat and moving into a different manufacturing plant, uh, gearing towards their newer products.
Exactly. Because you could tell from December 2021, they were 18.4 billion in revenue, and right now, December 2023, 6.6 billion. So that's 70% drop, close to rough math in my head, in terms of sales, which is really troubling if you're very bullish on Moderna back then. So you might just, hit the peak at some point back in December 2022. And right now, as of last fiscal year, they actually generated a lot of losses, $4.7 billion in losses. So what's important to look at in Moderna at this point is their balance sheet. So if you want to make sure that the stock would outlast its operations until it finds, like what we have just mentioned, the restructuring, they need to have a lot of cash. So for Moderna, their cash has been slowly declining, but it's not critical. Look, 10.7 billion in December 2021, 9.9 in 2022, 8.6 in 2023. So the company is doing a good job actually in holding its cash. As what we have just shared earlier in the group, in the messenger, one of the kings, if not the king of cash at this point, is no other than Warren Buffett, his Berkshire Hathaway company. He now has a world record of $168 billion in cash. So, just a little bit of segue, 168 billion, he can buy Comcast and get $2 billion in change. General Electric, he can buy the whole Bank of China if he wants. IBM, Applied Materials, Uber, Caterpillar, he could buy the whole Nike. Pfizer, he could buy another railroad company, Union Pacific, and build a total monopoly now. Dior, Amgen. So going back to Moderna, so it's important to always have cash, but let's take a closer look on its debt, because that's one more critical issue if they have a lot of debt. So not a whole lot of debt. This company will be standing for the next 5 or so years unless it makes a foolish move and then spoil all its $8 billion of cash. But you can tell they're closely spending it wisely. So what's the other company that? Oh no, before that, let's look at the valuation. The valuation, obviously, they don't have earnings, so you can't justify having price to earnings. Actually, they're not even expecting, Wall Street is not expecting earnings for next year. So that's another a little bit of a risky indicator. So it's hard to value Moderna at this point, despite being a $37 billion. So what's the other pick that you have, Wawi?
Well, this is a well-known company. This is Walmart, and I think they have done a great execution with their e-commerce, and their recent buyout of Vizio is
Mhm.
another interesting execution they did.
True.
And they're into a I think they just completed their 3-in-1 stock split
Mhm.
and increased their dividend by 9%.
Yep. Walmart is definitely a stalwart for people who just want to be on the defensive side of things. You want to consider Walmart being part of your core portfolio and not letting go. It's been through with United States as long as it has been founded. It has withstand a lot of recessions, including COVID, obviously, and it continues to innovate. It's not like Sears that went bankrupt after a lot of shenanigans done by its board. So Walmart for the year, it's up 11%. And actually, like what we had pointed out, just split its shares after deservingly hitting its all-time high Friday, 175.56. So Monday morning, you won't be able to see this price anymore. It's going to be down to around $58 a share, meaning that usual investors, retail investors, could even pick up a little bit more. And now it's cheaper, not cheaper in terms of valuation, but in terms of price per share. The company size is $470 billion. Let's see where it's at in the ranking. Walmart is around, well, it's on the 17th largest company in the whole world. Um, Price to forward earnings, it's 25 times, which is a little bit on the pricey end, but not compared to, let's see, where is this S&P 500 forward PE right now? Forward PE of S&P is 21 times. So a little bit of a pricey compared to the index, but you're paying up because of quality, not just because of promises. So yeah, beats its earnings, beats its expectations, generating how much per year of revenue? $648 billion in revenue, more than half a trillion dollars in sales and generating $15 billion in profit. I mean, the company is humongous. It's huge. Cash is relatively good, almost 10 billion, slowly building it up. Uh, Total debt, let's see, about 61 billion. So the company is a little bit debt heavy on the side of things, but if it's paying its interest accordingly, well, it's just paying how much? Interest expense is 2.6 billion, 2.1 billion a quarter or a year. They can definitely afford that. So Walmart is a really good pick. So Wally, what do you think? Should we go jump back to the Nvidia discussion?
Yes, let's go ahead.
All right, we just have a little bit less than 9 minutes to go in our latest recording. So finally, Nvidia. So if you're just gonna take a look at this chart, what the heck is happening? 70% rise. I mean, the stock has gone crazy up there. So a few more charts, I guess, for the S&P. So S&P, sorry about that. So this is a primer. S&P again. Election cycle. This is from All Star Charts. We are now way up there. So February to March, we usually try to drop and then bounce during an election cycle. So right now we are way up there. So just a little bit of caution. Obviously, how far are global stock from their peaks? S&P is already in the new all-time high. The stocks in Europe the 600 largest, are all also in the all-time highs. The Germany index is all-time highs. CAC, what is CAC 40? I don't know. CAC 40 index, what is this? The French stock market is also in the new highs. Japan has hit, finally, they've broken the curse for the last 34 or 5 years, all-time high. The NASDAQ is at all-time high. So only the worst performing indexes is found in China, Hong Kong, Shanghai, and Shenzhen. Worst indices in the whole wild world. So going back to Nvidia finally, Nvidia is now worth more than the GDP of every country besides the United States, China, Germany, Japan, India, UK, France, Italy, Brazil, Canada, and Mexico. So Nvidia is now larger than the whole economy of South Korea, Russia, Australia, Spain, Indonesia, Saudi Arabia, Netherlands, Turkey. So that's how enormous Nvidia is right now. Um, so that's the cash pile. So what's going on with Nvidia? So actually, they just reported their earnings this week. A lot of fear going into it. People thought that it's gonna beat the market and then it's gonna sell off, but it didn't. It actually increased by nearly $277 billion after it reported, indicating the largest gain in the stock market history in the whole wide world. So it just beat the Meta platform's 200 billion performance just 20 days ago. And Nvidia just recorded that outstanding feat. Now, in terms of its size, it's on the fourth largest company. It actually hit 2 trillion mark yesterday, and then it went down to $788 a share. So in terms of US, excluding this Saudi Aramco here, which is largest oil company in the world, it's top three already. It's now $100 billion worth more than Amazon, $200 billion worth more than Google, and very far from Meta platforms, $700 billion distant from Meta platforms. So where is it? Okay, so is Nvidia rally a bubble? That's the question. What do you think about that, Wawi? Is Nvidia in a bubble right now?
I think there's a lot of tailwind behind it. There's a lot of demand for its product right now, and it's it's got its competitors, but it has shown that it's the highest in demand product right now. So there's still tailwind for Nvidia. And I think, having heard the word inflection point from some of the articles I've been reading and podcasts I've been listening to, I think this is just a sign that the market is, the global market is at an inflection point, and Nvidia is just the sentinel for this. With the AI market at its infancy, we haven't seen anything yet. So if we're looking at Nvidia's record of 277 billion in one day, I would like to say we haven't seen anything yet, because the globe this is just the US market,
Right.
once the globe participates in this AI trend and the global financial market,
Right.
we will see astronomical numbers.
Keep in mind also, Nvidia has to cater to China as well because they've been barred doing business with China, certain, chips that they currently sell here in the US for competitive purposes. So if that door opens, I mean, it could go wild. And look at the valuation. It's just 32 times. That's the main thing about Nvidia. People are saying it's overvalued, but every time it delivers its report, it increases their earnings 200, triple times, Right now its forward earnings is just 32 times. So I think we were at 32 times also in the previous quarter. So the company is still relatively good. If
Mm-hmm.
they're generating a lot of growth year in, year out, I think it's very, supportive, unless
Yes.
all of this growth will be taken out, and then it's like a balloon, it'll just deflate. So, one thing that we have talked about in the group, one thing to keep an eye on Nvidia, the key point is its balance sheet. So this is to see how they're doing with their orders. So a lot of companies, Microsoft, Apple, Google, all of them, even Facebook, Meta Platforms, Zuckerberg said that they already ordered 9 billion worth of chips from Nvidia. This is not counting the latest design that they're going to release later this year. So the accounts receivable, this is what we would like to see net. So we would like to see that at least stable. But in a strong company, you want to see it stable. Like not much difference, but you could tell here from 3.8 billion, it more than tripled to 909 $10 billion. So meaning that they haven't fulfilled these orders yet.
Mm-hmm.
Meanwhile, you will also want to see the next line, inventories stable or even declining. So if this increases, this is a trouble sign for inventories, meaning that some they might be generating more chips, but people don't like their chips anymore. So this is a good indicator. But right now they're relatively steady. So this is a really good sign for Nvidia. So I pulled up a macro trends somewhere. So for macro trends, I'm looking at the growth for Nvidia. The revenue growth for the last 12 months, 125. I mean, the revenue for the quarter, 265, tripled its revenue. So did the shares tripled as well? Let's see. For the past year? Yes. So I feel like it kind of supports whatever. It didn't even triple. It still has some room to go.
Mm-hmm.
235% up for Nvidia.
Mm-hmm.
So I think I heard a podcast also saying that it could be that $10 trillion opportunity for this company.
It's a
But
huge opportunity in the AI,
it is
market.
for sure, yeah. Oh wow. Okay, we're less down to less than a minute. Well, I appreciate you guys tuning in. Thank you so much, Wawi, for joining us on this episode.